Okay, all right. Thanks a lot for that, Surbhi. Well, let's go across to Mangalam. He's stopping by to tell us about Britannia. Well, Mangalam, CLSA believes it may not be such a good day.
Well, it may not be such a good day as what CLSA believes, but let's see where it goes from here. Because while they've downgraded the stock from underperform to sell and reduced their target price to 4,060, the key reasons that they highlight are: one, high wheat and milk inflation will impact margins. Both wheat and milk inflation have been a problem for the company, but from the highs, they've also cooled off. They see downside risk to consensus margin estimates. So let's see how much downside risk there would be, primarily because in the third quarter, the company reported one of its best ever EBITDA margins. They expect volume-led growth in FY24. That's understandable because the last couple of years, the growth was largely price-led because of the high raw material prices. But importantly, the stock has run up 30% in the last 12 months, and that's where they believe that the room for upside is rather limited, which is why they've cut their FY23 to FY25 estimates anywhere between 1 to 11%. We'll watch out for where it goes.
Okay, thanks a lot for that. But there's been some revisions in the windfall tax. Let's get more clarity on that. Sonal has the details. Sonal, over to you.
Thanks a lot for that. Well, yes, it has been changed across all the products again. The windfall tax in crude petroleum has been hiked. It's a small hike that has come through, 4,400 rupees per ton versus 4,350 rupees per ton. However, the export duty on ATF has been cut to nil now from 1.5 rupees per litre. The export duty on diesel also has been cut to 0.5 rupees per litre versus 2.5 rupees per litre earlier. On petrol, it continues to be nil as well. So it's largely positive for the refiners, especially Reliance Industries as well. So CLSA has written a note on this. They said that windfall tax has been cut on refined products, but it has been raised slightly for crude petroleum. It is slight positive for Reliance's post-windfall margin that they are calculating. On ONGC, they have a target at 225 rupees per share. On Oil India, 300 rupees per share. On Reliance, they have a target price of 2,970 rupees per share. They say the post-tax realization for crude stays at $75 per barrel, which is a positive for oil producers.